Hey traders, Raghee here, and in this update we're going to look at the markets in two different ways. One from the perspective of weighting individual stocks and sectors and the broader averages, and the other from what do we do with the range that we are stuck in. So let's start with the bigger picture in terms of how do the sectors and individual stock weightings affect where we are right now, and what could they tell us about where we're heading. So we'll stick with the S&P for this conversation. And we can see here, that is the range we're stuck in. This is the range after the rally at the end of May that traders and investors are thinking is the bottom in. Could be, don't know. And we don't have to know, by the way. But there is a path of least resistance that is still visible. And that is looking at the trend that was, which is down. And if we are going to resume any direction, is it likely to be a reversal or is it likely to be continuation? Well, probability-wise, the idea is a continuation. This morning looked like we were definitely going to see finally a break of support on the S&P. And instead, we got to 10 a.m. and Janet Yellen said, breakdown on the S&P, not on my watch. And you could see what happened in terms of her comments. And I'm only being slightly facetious, but ultimately what she said was perceived to be relatively bullish. And it's not about what she said, gang. I'm not sitting around reading into the words. I'm looking at the way price actions reacting to the words coming out of her mouth, right? That's what we do as traders. I'm not trying to guess the meaning. I'll see the meaning in price. And so we remain stuck in a range. Today really was nothing new. It was an up day in a sideways market. I still see the XLK under pressure because Apple is still very much under pressure. And if there is an important stock that really has not convincingly gone neutral, it is Apple. It really is Apple. And Apple's weighted heavily within the XLK, the NASDAQ, the S&P. I would look for just Apple to keep resistance below the wave and below the 200. If that's the case, it is likely going to drag at least the S&P and the NASDAQ down with it. Another corner of the market that's very interesting and weighted within the NASDAQ is XLY. XLY has not spent that much time inside the wave. Very few blue grab candles and not really a lot of consolidation. It looks decidedly bearish as we break some levels of support. Why is it bearish? Well, think about the top weighted names within the XLY. You've got McDonald's, you've got Home Depot, you've got Tesla, which is in a downtrend and is straight up a double red short the rip. And you've got really the end of the retail rally in Amazon going into the split. Everyone, please remember, splits are not setups, they're psychology. And in the immediate expectation of the split, there's typically traders and investors who will play that bullish momentum. After the split, we look for the market to move lower. And this one just happened to have been in a downtrend. So we're going to be looking for the continuation anyways. How much? Minimum, I'm looking for about 10%, which would put Amazon around 110 as we move lower. So again, remember, the psychology in the split is before the split. We're typically going to see bullish momentum, retail investors scrambling in before the split. And gang, of course, that's just a basic misunderstanding of what happens to the price. I could either buy the one share or I could buy 20 later on, or my one share could turn to 20, but you're not spending really any more or less, right? Well, actually, no. Oftentimes after the split, if you wait a few days, a week, you can see lower prices. You could pick the shares up post-split, usually about, like I said, 10% lower. So that's the tack that I would take as an investor. If I wanted to buy Amazon, let it give me that 10% move to about 110, 112, and that's where I'll look for it. But in the meanwhile, if Amazon heads lower, Tesla continues to head lower, XLY heads lower, that's gonna be a drag on the NASDAQ. Now, if you don't want to engage in this downtrend, if you don't like the idea of shorting in an environment where we can get these really wild rips higher, these retracements, especially in the frustrating zone of just being stuck in a narrow range, now we take that narrow range, visually we can see it, look at all the blue grab candles, and then we say, all right, Naz, I'll look at the intraday, the shorter term view of the market with this in mind. If I can't get follow through on the daily, if we can't pick a direction and follow through for a few days or a few weeks, I'll look for a 5-minute chart to follow through for, say, a couple of hours, if even that. And that's where looking for opportunity in terms of fading resistance, buying support, taking advantage of intraday time and volatility rhythms, overbought and oversold zones makes sense. As long as we're stuck in the range, right? Dailies are going to be difficult. Almost all the sectors and indices are stuck in a range. But that range, when broken up into 5-minute candles, remember, we're getting 12 5-minute candles per hour, right? Think about the setups, the triggers, and the follow through you'll see when you're getting this much action. Well, that's why in this very narrow range, day trading is a great gear to shift in. That's how I'm handling this current market. That's how I'm viewing the path of least resistance. And this is the way very often I'm going to trade through summer. And actually on June 16th, it's right around the corner. We're talking about, let's see, today's the 7th. So yeah, next Thursday. Wow. Okay, so next Thursday, June 16, we've got a webinar on exactly how I am trading the intraday time frames and how I like to shift to this gear each and every summer. So if you're interested in learning more about time, volatility, how we use overbought and oversold tools on our chart to take advantage of, what if we continue to trade like this through summer? What if we don't? How can we take advantage of short-term movement, find one of actually 4 2-hour windows that I like to focus on, and just say, look, if I can't get week after week of follow through, or even day after day, how can I find 30, 60, 90, 120 minutes of follow through that I can take advantage of in a short-term chart? So that's going to be June 16, 8 p.m. Looking forward to seeing you there. In the meanwhile, if you have any questions, if you have any comments, feel free to leave them below, and I'll see you in Charts and Coffee tomorrow, 9 a.m. at the Simpler Trading YouTube channel. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.